All right, what's up, everyone? Swinging Bull here. Welcome to the spread stream I do every Tuesday. How you doing, Coyote, Pistox, McNulty, Sailor, Yojo? I'm sure other people will join us as they see us live over here. I am currently long on Visa. I do have a hedge in place, a December put. Um, they report earnings after the closing bell today, here in about an hour. So I'm interested to see what their earnings come out. They did just have some news break that they're laying off around 1,400 employees and contractors um, as a way to, they're going to be restructuring its international business. So we did see some selling. It went down to 285.35, but immediately got bought up here. You can see from the big bottom wick, big lower wick, and we've got a buy side imbalance now in the order book. So we'll see if you can kind of claw back. But who knows? Maybe this is just they wanted to get that news out before the actual earnings data comes out. So we'll see if it's taken positively or negatively, and kind of go from there. Net's having a okay day today. I did start the wheel again on Ford. So I'm targeting the $10.50 strikes. And we can kind of just go over that real quick. I'll pull up my spreadsheet. I am a little bit green on the position already. Here, I'll show you. Let me pull over my Fidelity account. Yeah, this bottom position here. So I sold the $10.50 put for this Friday's expiration. So it's only like a couple day hold and already up 11% on it. Just sold one of them. I've been playing kind of light because we got the presidential election on Tuesday. So it's nice to make just a little bit of money while I'm waiting on the election. But this is what the spreadsheet looks like. Oops. Okay, so this is my second batch or my second round of cash secured puts on it. About a month ago, I did sell my first round, collected around $50. Like I said, playing small, but not going to just stop trading. So I still make a little bit of money here and there. And after the election and we find out who the president's going to be, then I'll put a plan together to start upping my allocation again. So my second round of puts, actually opened those up today, this morning. So you should see it in my alert channel. Collected $20 a contract. Just sold one of them in case Ford wants to, maybe the selling isn't completely over. They still pulled a profit, which is what I was wanting to see. And this selling was from their earnings reaction, which was yesterday after close. And they just lowered guidance a little bit, so investors didn't like that, and it kind of sold off. But they were still pulled a net profit, and that's kind of more what I was concerned about as far as the data goes, as far as my confidence level and continuing to wheel it. So yeah, they had a negative. I was kind of wanting them to have a negative reaction because I didn't have an open position as of yesterday, and so I just look at it as getting a kind of a discount on the stock now. And I can target the same strike, the 1050 strike. And they also pay 5.76% dividend. So look, if I get a sign, that's fine. Then I'll be able to start collecting the dividend, and I'll just sell some covered calls on it with my shares. And I might even do like a modified wheel where I kind of convert it to a short strangle, which would mean, and I would only sign. So if I do the sign, converting it to a short strangle would mean I get a sign, I have the shares, now I can start selling covered calls. Okay, I just want to do a mic check. Polecat says they're not hearing anything. Can y'all hear me okay? Mic check 1, 2. Okay, all right, thanks, Yojo. Yeah, Polecat, maybe leave the stream and then come back, and maybe it'll work there. Also check your audio settings maybe. So anyways, modified version of the wheel. So what I was saying is, if I do get assigned shares, then yes, I'll be able to sell covered calls. But then I may sell more puts at a lower strike, and then that way I can collect almost triple income. It'll be triple income on this because I'll make premium on the covered calls. Then I'll open up more cash secured puts and make premium on the puts at the same time. While I'm selling the covered calls, I'll sell more cash secured puts, and then of course collecting the dividend would make it like a triple income trade. So I'm pretty happy with it, and this trade expires on November 1st, which is Friday. Since this is my second round of cash secured puts, if I get assigned, my cost basis is only going to be $10.06. So I'd be happy, taking the assignment at $10.50 and only having like a $10 cost basis. And then, I would be just fine holding for it at $10 and just selling covered calls on it. And like I said, converting it to the short strangle. So that's the deal with Ford. And also the Oxy bullish spread from last week. It did go against us. I guess what happened was I was thinking Oxy was gonna kind of pump, but what happened was, I'll pull up this news article. It kind of explains it. So shares are trading lower on Monday, along with other stocks in the oil sector, after Israel reportedly did not damage Iran's their oil sites. Okay, if they launched a bunch of missiles, it was like 180 missiles, and what ended up happening is none of the missiles struck any oil targets. And if that would have happened, if they would have struck an oil target, you would have seen oil and energy rally. Okay. Oxy would have probably went back to the mid 50s. But they started launching missiles on Saturday at 2:15 at night. And they launched 180 missiles. And what happened was President Biden had made some statements and urged Israel not to strike Iran's oil or nuclear infrastructure, like kind of warned them not to do it. So that's basically what happened at the end. Is they did go ahead with the missile launch, with the airstrikes. They launched 180 missiles, but they didn't target any oil sites. Okay, so with that happening, there's not really a threat to the oil supply if they didn't strike any oil sites, and that's what would have made Oxy jump probably back to the mid 50s. But since they didn't hit any oil sites, then there was no threat to the supply of oil, and with that happening, that's why Oxy is selling off, and energy is kind of selling off, because that threat to the supply kind of went away for the time being. Anything can happen over there, in the Middle East, and shoot, next week they could launch more missiles, and maybe next time they do hit an oil field or oil site, and then you'll see Oxy pump. But for me, I'm just not willing to take any more risk on it. So what I did was, it was a put credit spread. I sold the 52.50 put, and I bought the $50 put. So I had a short leg and a long leg, and it's for November 15th expiration. So there's still about 15 more days on the contract. But since it was going against us, and the threat of the oil supply being affected from the missile strikes kind of went away, what I did was I did buy back my short leg for a loss. Okay, but I left my long leg open. So I bought back the 52.50 put and closed that out, but I left my $50 long put open, so it's still there, and I am profitable on that leg. So my thesis is, if Oxy does keep selling off, it's already been breaking to the downside past some pretty important levels, and I'll just go on the daily chart here, but you could see it was basically around the mid 50s, right? That was pretty good support on the horizontal looking. If you're looking at the horizontal levels, you can see it's already broke down below that, and there was some trend lines that got broke as well. But you could see it kind of looks like it wants to keep going down. Let me just move this up like that. It kind of looks like it wants to keep going down. So that's what my thesis is on that Oxy bullish spread trade is. I bought back the short leg to stop the bleeding there, and then I'm just going to keep my $50 long put open, and look, if this ends up going in the money, because my strike price is 50, Oxy's trading at $50.07. And for the rest of today and the rest of this week, if Oxy ends up back in the 40s again, that $50 long put's going to end up in the money, which is going to be a very, very good thing, because it'll start gaining a lot more value than it already has now. And we'll probably, be able to make the little bit of money that we lost on the short leg. We'll be able to make that back on this long leg, and good chance we could also make some profit and kind of turn a bad trade into a winning trade, if you will. So this is just some of the management techniques you can do on the spreads. Some people trade spreads and it's like, all right, it goes against me, and they're not really sure. They're not aware that we can manage these different ways. Like just because the spread goes against you doesn't mean we just need to stop out of it and take the loss and it's over. There's different tricks we can do, and one of them is closing out your short leg and keeping your long leg open, to see if the long leg keeps running, because obviously the trade's gone against us, right? So it's probably going to keep going against us, and that's why we stop the bleeding on the short leg, keep the long leg open, and a lot of times we can make some good value on that long leg now that it's open by itself, and then very easily turn a bad trade into a winning trade with the right management. Okay, and I was sitting around 2x the credit received on the position, which kind of told me, okay, now's the time we should probably try and manage this a little bit, because I'm not willing to take any more risk on the trade, as it's going against us. Breckle, you crazy man. I'm not even going to mention that because I'm being recorded right now. Anyways, so that's the deal with Oxy. I have a $50 long put with 15 more days left on it. And like I say, if Oxy goes back into the 40s, which it looks like it very likely will, probably, maybe even today. I think it did wick down to 49 something today. Yeah, it went to like 49.97. So it's already kind of breached it. Now I'm just going to be looking for some continuation to the downside, and we can make some money on that long leg. So that's just kind of just want to explain to everyone what I was doing with that Oxy spread. You can find all the details in my alert channel, Options by Swinging Bull. Okay, so that's the deal on Oxy. And I just want to take a look at something real quick. What time is it? Almost 3:15. Okay. Visa's still kind of selling off a little bit. Again, it wicked down to 281.35, and it has popped up a little bit from there, but looks like there's still some selling pressure. Hopefully, they're just trying to get this out of the way before the earnings. Could be a strategic, news release from the company, because, like I say, they have earnings after market close today, and they decided to drop this news right before the earnings. So this news just dropped like 30 minutes ago. And basically Visa plans to lay off around 1,400 employees and contractors, because they are going to be restructuring its international business model. So, again, obviously it's being taken negatively now, but maybe they're just trying to get this little piece of bad news out of the way. And then we'll get the earnings announcement in about another 45 minutes. The data should be out, and then maybe it ends up going back the other way and starts trending back up. So we'll see what happens, but it looks like the company's playing a little bit of chess right now, by releasing this layoff news right before, an hour before their quarterly earnings report. So we'll see what they're up to and what happens. Net performing well. It's getting a nice little pump here in the close. Actually, I do have a bullish position on net, so that one's performing well. Now we got the presidential election on Tuesday, November 5th, early voting has already started. So, expect some uncertainty and some basically some volatility from uncertainty about the elections. We could see that, towards the end of this week, you might start seeing VIX go up a little bit. And matter of fact, where's VIX at right now? Let me see. Okay, it's sitting here at 19.34, so it's a little bit below 20. I wouldn't be surprised if VIX goes back above 20 as we approach the official election day on Tuesday. Oh, Breckle, you coming down in a couple days to fix some roofs? Cool, man. Enjoy some of that Florida weather now that the hurricanes are gone. So yeah, but basically I'm trading very light. Okay, I just showed you some of my positions on my Fidelity account, and you can see I'm only doing one contract on each of these trades, so I'm trading extremely light. And even with that Visa 1400 and layoff news, my short 282.50 put is actually still profitable. I still got $80 on the table on that. So I just wanted to point out that I'm trading really light. Let me so the spread that I'm going to do today is I'm probably just going to do one contract on it, one spread. I'm not going to do what I usually do. And I just want to be comfortable throughout this week leading into next week and not be stressed out about anything. Let me take a look at the overall heat map real quick. Just want to see if anything kind of pops out on the screen. So Microsoft is up. Okay, so that's software. So software's up. Semiconductors are up today. Nvidia is up almost 1%. ABGO is up. AMD up over 3%. So it kind of just seems like a risk-on day, right? And you can see over here, energy took a hit because Israel performed some airstrikes over the weekend, launched 180 missiles. They did not hit any oil targets. So energy is pulling back right now because the threat to supply is diminishing for now. Like I said, next week they could say, all right, we're going to do another strike. This time we are going to hit the oil fields, and then be ready to go long on Oxy at that point. Let's see what else we got. Consumer defensive even pulling back today. Again, that's probably associated with the Iran Israel deal over there. So definitely looking like a risk-on day. All the risk-off safe haven stuff is kind of pulling back today, and all the the tech and risk-on stuff is green. So it just gives you a bird's eye view of what's going on in the markets today. What's the deal today? Well, it looks like it's a risk-on day, doesn't it? And risk-on days are great for playing calls on pullbacks and stuff like that, and just, pull up the heat map and see what's green, see what sectors are green, and focus on those sectors. If you want to short the market, pull up the heat map. Wait about an hour after market open. Give the day a chance to gather some data. If you pull this heat map up right at 9:30, it's probably not going to tell you much. But wait about an hour or an hour and a half or two, and pull it up and see if there's some sectors that are popping green, and then just play calls on the pullbacks on those. Or if you want to short the market, find some red sectors, and you could probably short the spikes if you're into day trading and stuff. Sector information, just as I expected, you got communication services and tech leading the pack today. Industrials a little green, but still basically flat. So risk on stuff is green. The risk off stuff and the safe haven stuff, those are all red today. So just kind of tells you right here, you can see from the sector information, the same kind of point of view that I was getting from the heat map. It's kind of telling the same story, right? So I look at this stuff every day, basically. It's good to know where's money going out, where's money going out of and going into, and once you get used to looking at it every day, you can be like, well, last week, the safe haven stocks were green, and this week they're pulling back, so that tells us that money's coming out of safe havens and going into risk on stuff. So this kind of paints a picture for us. Economic calendar, as far as major economic reports, we're basically done for the day today. Tomorrow we got some employment data, pending home sales 10 o'clock. Doesn't really move the markets that much. Maybe some of the new home builders or something, I don't know. Thursday is PCE and jobless claims, kind of a double whammy at 8:30 a.m. So two pieces of major economic data being released at the same time on Thursday morning, which happens to be Halloween. So we'll see what happens there. Thursday morning will probably be the market mover of the week, because PCE, which is personal consumption expenditures, that the Fed's really like seeing what that number is to help them gauge on their future plans on interest rate adjustments and stuff like that. They like to see that number. Friday morning, more labor market stuff, basically unemployment, employment, hourly wages, so all labor market stuff. But I do think Thursday morning we'll probably see either a gap up or a gap down. So if you're a gap hunter, Thursday morning there's probably going to be a gap of some sort going on in pre-market. Okay. And then next week we got the interest rate decision. This is the November meeting. Okay, it's a big meeting. It's the interest rate decision meeting. And it's very interesting because it's on Thursday, November 7th. Usually they do these things on Wednesdays, but I'm assuming because of the presidential election on Tuesday, November 5th, they probably pushed it out. They obviously pushed it out a day, maybe to give that, the election day time to breathe or something. But next week is Thursday is going to be the Powell press conference. So that's interesting. I'll probably stream that live. That's at 2:30 p.m. Eastern next Thursday. And of course, the actual interest rate decision at 2 p.m. Let me just see what the probabilities are for the interest rate adjustment. Okay. So the current rate, so 4.75 to 5. Okay, that's what it is now. And it looks like 98.9% chance that they're going to drop it to by 0.25, which would put the interest rate, the new Fed interest rate, in the 4.5 to 4.75 range, from 4.75 to 5. So the odds or probabilities for next Thursday's Fed meeting, interest rate meeting, is that we will see a 0.25 reduction in the Fed rates. Okay, so it's good to know that. All right. So now that we've gone over all that, let's go back to the sticks. SPY still going. I figure the spread for today, I'll see if I can make a couple bucks by Friday. I don't really want to pick an expiration date that overlaps the presidential election, which again is on Tuesday. So I'm just going to do a short 3-day trade, be a 3-day hold, 1, 2, 3. Maybe we can take profit sooner, but I'm just going to pick this Friday's expiration to be safe. And I'm thinking of just kind of going with the trend here. I was thinking about a call credit spread, but I have heard some rumors online and from some analysts that Wall Street's kind of starting to price in a Trump win. And again, I'm not going to get into politics. I'm just, letting you know what's going on. Wall Street may be pricing in a Trump win, which means, we could see the market rally, leading up to the election. So not only am I going to go with the trend, because overall, looking at the past 1, 2, 3, 4, looking at the past 5 days of price action. I mean, it technically is making higher lows. Okay, you can see it clearly on my screen here on the left side. So if this kind of trend continues making these higher lows here, and then couple that with Wall Street pricing in a Trump win, because stocks, if Trump does win, we're going to see the stock market rally. Okay, I think S&P 500 will probably break 6,000. That's just my predictions if we get a Trump win. If we get a Harris win, we might see some pullbacks. Businesses and companies that are listed on the stock exchange. A lot of Harris's policies, if you will, is not good for big business. Okay. Again, we're not going to sit here and argue politics, but I'm just telling you, cut and dry what the deal is, what the facts are. I mean, there's really nothing to argue about. I'm not going to sit here and say I'm pro this and pro that and get into all that crap. But the bottom line is if Trump wins, that's good for big business. And big businesses, that's basically what's listed on the stock market. And it's going to be beneficial to the stocks if we get a Trump win. If Harris wins, we could see a pullback because a lot of her policies, aren't doesn't increase profit for big business, if you will. So neither here nor there, and I'm not going to get into who I'm voting for, but it's just the facts, okay? And it's just the facts, all right? So the word on the street is Wall Street starting to price in a Trump win, which means we could see a rally, and I'm going to position I'm going to position myself for it. I don't care who you're voting for. I'm just here trying to make some money. All right. And I'm going to position myself based on what people are saying Wall Street's probably doing right now. And then couple that with the higher lows SPY has been making in the past 5 trading days. So my idea for today's spread is just going to go with the trend and go kind of with what Wall Street's trying to price in. And I'm going to do a put credit spread. And I'm probably just going to place the spread right below one of these higher lows from the past 5 trading days. I'll just place my spread below one of those. I'm thinking about maybe I might be able to get away with selling the 576 and buying, or basically sell the 576 put for Friday. So I would sell to open that and then buy the 575 put to form the spread to obviously limit our risk. And if I can make 20% on my money by Friday, I'll be pretty happy with that. Okay, and we're giving ourselves, if I put it at the spread at 576, I'm giving myself, you can consider these higher lows to kind of be levels of protection, if you will, almost like a safety net, where the price would have to kind of fight with those levels before it does, assuming it does go against us, which obviously we don't want, but I'm just trying to give myself some protection and some room. And then we have some of these higher low levels that should play defense for us if it does go against us a little bit. And the thesis of the trade is it's going to be a 3-day trade. Again, expiration November 1st, Friday. And look, at the end of the day, as long as SPY stays above 576, this is a no-brain trade. This is a no-brainer. It could be a slam dunker. Just SPY staying above 576 is really all that matters with this spread trade. Okay. So with that said, let me see what the spread's paying. I'm just going to pull up option strat for now, but I'll probably do this trade on my Schwab account once I get the order filled. So November 1st, okay, so that's Friday. And let's do this. So got my 2 puts right here. And I just want to see, now the one I'm selling to open is always going to be closer to the money. So 576 to 575. Okay, this pays $20 a spread. So the margin that your broker would tie up would be $100. So that's 20% return on capital being tied up. Max loss is $80. So yes, I know that it's not a good risk to reward, but anyone who's been trading spreads for a while knows that that's pretty common when we trade spreads. So basically what we could do, I'm going to enter this trade, and I'm only going to do a total. I'm just trying to think of what I want to put at risk here, because I'll probably do a total of 5 spreads total. Again, trade your portfolio accordingly. I mean, for smaller accounts, maybe just do 1 or 2 spreads. you could maybe add one now, and if SPY does pull back a little bit, but it's still above 576, and you can consider maybe adding to the position and getting more average credit received. For me, I'll probably do 5 total. I'll do 2 today. I'll save 3 bullets in the chamber in case it goes against me a little bit, but it's still trading. Maybe it's still trading well above 576. Like SPY's at 582.86 right now. Maybe SPY pulls back to 580. It's almost a $3, to the downside move. Something like that happens. We're still well above 576, but it did pull back on us a little bit. We could, and again, check the charts. If it pulls back to one of these higher lows, and look, the first one's right around 580. So if it does come back down and test that, or you could play it a little safer. Maybe if it does move against us a little bit, maybe wait for 578 as a level, and then you could add your final allocation and then just have a tight stop loss after that. But we're giving ourselves a couple chances for the play to work out instead of it just being, one and done and not being able to do anything. Duco, not yet, but I'm thinking of doing a bullish spread on SPY for Friday's expiration. I was saying earlier that some analysts are saying that Wall Street is possibly starting to price in a Trump win. So I'm just going to kind of go with the flow. And SPY's been making higher lows over the past 5 trading days. So I'm just going to be safe and go with the trend instead of trying to call the top or something. I'm just going to go with the trend and maybe piggyback with what Wall Street's doing right now. And only going to be a 3-day hold. I'm just shooting for 20% on return on my money. Okay. So that's probably what I'm going to do. The spreads are selling for $20 each. Breckle says bet the farm. Anyways, let me see if I can get filled here at 20. Again, November 1st expiration. I'll type this out after this here. All right, so it's the 576, 575. Give me one sec, y'all. Yeah, mid price is right around 20. So let me see if I can get filled at 20. And again, I'm only doing 5 total. I'm gonna do 2 now. And if SPY pulls back to like 580, 578, but and obviously still above my short strike of 576, then I'll do 1 final shot and add to the position to give me a second chance for it to start moving in my direction we want. Shoot for 20. Fill at 19 is probably good as well. But let me see if I can get filled at $20 first. And let me go ahead and type this out as well. And let me just take a picture of this real quick. Okay, beautiful. I'll post the trade in the trading floor chat as well. Okay. Okay, I'm going to save this trade here as well. Okay, let me get this typed out because it's already past 3:30. Make sure, if anyone wants to trade this with me, that they have time to get in. Okay, let me just copy one of my previous ones so I don't have to type it out. So put credit spread bullish. Sell to open the 576 put. This is just a 3-day trade, y'all. Nothing crazy. I'm not trying to be married to any trades right now. But a couple days is fine. So sell to open 576 put. Same trade ticket. Buy to open the 575 put. Friday's expiration. And try and shoot for like a 20 credit. 19's probably okay. Stop loss can be 2x the credit received once you're fully into the position. My first entry, 2 spreads. I'll still have 3 spreads to add later if SPY pulls back some. If SPY pulls back some, but is still above my short strike. Basically, just want SPY to stay above my break even. And our break even is actually only 575.80. So we got a little bit of room to play with. 575.80. Okay. Let me get this alerted to everybody. I'll post it here in the channel first. And it doesn't look like I have any typos, so we're good. And I'm gonna put it in my alert channel as well. And that's probably the only trade I'm going to do today as far as spread goes. So again, I don't want to be too over allocated heading into the election. Oh, I got a typo in there. Shit. Okay, let me post this again. Okay, if anyone has any questions about that, just let me know. Go back to the sticks here. Okay, 3:37 p.m. What's going on, folks? I see Nikki and Porter are here. Big Bull, I wasn't sure if you were in that Oxy bullish spread with me. Not sure if you saw what I ended up doing with that. I ended up buying back the short leg and keeping the long leg open. Yeah, I'm just gonna keep the long leg open. Yeah, and look at it this way. You know, I've accepted the fact that the play went against me, and I'm not just gonna let it bleed out on me anymore. It got to about 2x the credit received, so that's usually when I start thinking about managing the trade or thinking about stopping out. But I figure, hey, you know, instead of just stopping out of the spread and just taking a loss and that'd be the end of it, you know, I think personally, Oxy could end up back in the 40s in that $50 long put. You know, if that thing ends up in the money like tomorrow, we'll probably, you know, make back all the loss we took on the short leg and probably still make some profit. So just kind of a way to turn a bad trade into, you know, a good trade. You know, it's not all bad. Like, and that's just a little trick on how we can manage these sometimes is, look, it's already gone against us. It'll probably keep going against us. So, hey, let's just stop out of the short and keep the long open. And a lot of times, you know, it ends up working out and you can actually make a little bit of money. And at the end of the day, we turned a bad trade into a winning trade. It doesn't always work, but I figure on this one, I'll take a shot at it because if you look at the bigger time frames, specifically the daily chart, let me just reset this here. Specifically the daily chart, you can obviously see Oxy has lost some important levels here. And, you know, if Wall Street is front running a Trump win, you know, we're going to see stocks go up. And then I think energy comes down a little bit more. And couple that with Oxy breaking some key levels on the bigger time frames, you know, like I said, if Oxy, even if it just drops to 49 bucks, that longer dated $50 strike put that we kept open, that's now going to be $1 in the money. and it should be pretty profitable on that leg. So that's I saw you had popped into the stream here, Big Bull. So I just want to make sure because I knew you was kind of following that trade with me or in the trade with me. So just want to make sure you know what I'm thinking and why I'm doing what I'm doing. Oh, it was your first time getting into this kind of trade? Oh man, I'm sorry that happened. So it's the first spread you took, and it just happened to be one that went against us. And it's interesting because this was my second time trading Oxy. I tried to dip my hand into the cookie jar. It looks like my hand got smacked. But the trade I did right before this one was also a bullish Oxy trade, and we made some pretty good money on that one. So on this trade, I'm kind of giving back my profits a little bit on my previous trade. And again, I'm sorry if this second Oxy trade was the first one you got into, and that's stake that it just happened to be one that gone against us. So I apologize about that. But overall, if you go through my alert channel and go back to the beginning of the year, I've got like an 90% win rate on these things. So, every now and then I take a loss and it stinks, but as long as we manage the losers accordingly, taking a loss every now and then, it shouldn't be hurting you. Yeah, to do spread trades, you do need a margin account. Yep. And the reason for that is because you want the buying power reduction. Because if you were to just sell a naked put option, sell to open a naked put option, that's going to require a ton of capital, basically the strike price times 100. So Oxy, for instance, that 52.50 put that we sold, well, it would take 52.50 times that by 100. If we would have sold that naked, we would need over $5,000 to trade that. But since we bought the $50 put to form a $2.50 wide spread, $2.50 wide spread, that's 250 times 100. So now we go from needing over $5,000 to now only needing $250 for the trade. So that's kind of the beauty of the spreads is we can still play like big money options, but we don't need all the buying power. Yes, it does limit our upside, but it's predetermined what our max profit and max loss is before we enter the trade. So there's really no surprises. It's all about how we manage them. And but yeah, that's kind of a little overview on basically spreads, if you will. I think one of the main features is basically the reduction in capital needed to trade these things, to trade higher dollar options. Okay, so your account allowed you to do the Oxy trade, but only one multi-leg trade without margin. Okay. Yeah, I mean, as far as margin goes, I would say Schwab. Schwab's a great because then you'll be able to do your trades on Thinkorswim, so that's really good there. Fidelity's good, but just so you know, to trade spreads on Fidelity, you would need a minimum account size of $10,000. Just want to make sure everyone knows that. So it just kind of figure out where you fall in. If you just wanted to start trading spreads with 2,000 or 2,500, then go to Schwab. Robinhood is also user friendly for spreads. Another thing I want to point out, Webull. You can trade spreads with Webull, but for some stupid reason, Webull does not offer a buying power reduction on the spreads. So I don't like Webull for spreads for that fact. So just to summarize, I think Schwab is probably good to go. If you have more than 10K, I would recommend Fidelity all day, all night, but not everyone has a account size of 10K. So if that's the case, then I would just go Schwab, and then you can use Thinkorswim, and it's a real good platform to trade multi-leg options on Thinkorswim. So I hope that helps. They're Big Bull, love the name. Duco says trade mostly on mobile because you're working. Yeah, Robinhood for margin. Yep, I totally agree with that. It's very user friendly. It's a good place to start your spread trading journey. And then maybe I'm not saying anything bad about Robinhood, but maybe once your account size gets a certain size, then maybe consider going to a more reputable broker like Schwab or Fidelity. But it's Robinhood is just fine, and I mean, you can just trade with them, and like Duco says, it's real easy to do on your on your cell phone too. So, as Snowflake says, just quit your job. Oh, okay, Duco, there you go. Yeah, so you don't trade on Robinhood, but yeah, it's very easy to do the spreads on it. And Spirit Change, yeah, Robinhood has good margin rates. Yeah, so I mean, big bull, I would just say Robinhood, and then once you really get a feel for it, if there's something about Robinhood you don't like, then you could just send everything over to Schwab and call it a day. TK, you have Fidelity and Schwab, and you have to do the options. Sounds like the options application. Now, I can't tell you how to fill the form out, but in general, they're going to ask you a lot of questions about risk and how aggressive of a trader you are and stuff like that. If you want to get approved, you kind of have to answer those questions that you are a very aggressive trader and you're willing to take on a lot of risk. That's how you get those applications approved. If you fill out that application and you say that, oh, I'm a safe trader, I don't take a lot of risk, and it's going to get denied, because to trade options, you kind of have to be aggressive and take on a lot of risk. So that's kind of the key of filling out those applications, because and trust me, don't get me wrong, there's a lot of people that fill out those forms honestly, and they get denied, and they're like, what the hell, why did I get denied? I've been trading for 5 years and I can't get this application approved. Well, it's because you're filling out the application and you're not telling them what they want to hear. Again, I'm not telling you to lie on the application. I'm just merely saying what how you need to answer it to get it approved, and that's just what it is. Okay. So I hope that helps. Again, for anyone joining late, I did open up a bullish spread on SPY. It expires on Friday. We're going to see if SPY keeps making these higher lows, and that should be an easy trade. Yeah, exactly, Sailor. You get creative with the truth. I mean, you might not be an aggressive and risky trader all the time, but maybe you are, every now and then. So, if you answer the questions that you're an aggressive, risky trader, it's kind of true, right? Because you are sometimes. So, like I said, don't lie, but there's ways to stretch the truth and get the application approved. Okay. Exactly. Okay, go back to the sticks on Webull here. Visa at 282.25. They got earnings at 4:05 p.m. Eastern coming up here shortly. Let me just check on the time real quick. On Earnings Whispers, and this particular website, Earnings Whispers, has been loading slow today. It's like a lot of people on it. A lot of people on their server right now. I'll come back to that when it loads. I think it's at 4:05 p.m. Eastern. Okay, here it is. Yeah, there's a lot of people on Earnings Whispers right now because their website's not loading. Oh, I'll come back to it. Okay. 15-minute. Net pumping into close. I like it. Okay, and I think I believe Ethan is streaming the Visa earnings, I believe. So I'm probably gonna join as a spectator when he does that, because I'm very interested to seeing what Visa's earnings report data comes in at. Oh no, wait, I think Ethan's actually streaming AMD and Google. I apologize, but I'll have my eyes on Visa nonetheless. JetBlue taking a bit of a hit today. They were not able to pull a net profit on their earnings. They released earnings this morning, and pre-market was considering continuing the wheel on it, but they gave a very bleak outlook for the remainder of this fiscal year, and they're not even putting out adjusted 2025 guidance until January, they said, and they weren't able to pull a net profit. They pulled a surprise profit last quarter of 25 million. This quarter, I believe they were negative net income of like 60 million. So they're back into the negative, losing money every quarter. So, you know, I'm not sure if I'm going to continue wheeling it or not. I've already made a bunch of money on this in the past year. So I think I'm just going to maybe sit JetBlue out until they can become profitable again. And there's no harm in doing that. Okay, almost 4 p.m. Eastern. I'm probably going to go ahead and end the stream if no one has anything. Again, I opened up a bullish spread on SPY today. And the Oxy spread, I bought back my short leg. I'm going to keep the long leg open. It's a $50 strike. Expires November 15th. The price of Oxy is trading just above that. If Oxy, even goes to 49, that $50 strike will then be $1 in the money and will be worth some good money. And then I'll go ahead and take profit on that, or maybe just put a stop loss, because if it keeps dropping, it's just going to keep appreciating in value. So that's a little recap on what's going on. Okay. Okay, TK, you grabbed a little DJT spread to hold till after the election. Yeah, it's a lotto play. Yeah, as long as you consider it a lotto play and accept that fact, and then yeah, it could be fun to do that. If Trump wins, I would assume DJT's probably going to rally. I would think. I know it's already rallied. I think it's rallied from $11 to what, 50 something bucks in the past 30 days. So it's already gone to like, here, let me just pull it up real quick before I end the stream. Because that one's been a wild ride, mainly to the upside. So yeah, look at this. This is from about a month ago. It was trading at $11, $12. And this thing's gone all the way to 57 and some change. Had a little bit of pullback this morning, but has since recovered. V-shaped recovery. We'll see. But yeah, that would be a fun one to do. All right, cool. Yeah, so since no one else has anything, hope y'all enjoyed the stream. If you have any questions about any of the spreads, just shoot me a DM. I'll let you know exactly what I'm doing with it, or what I plan on doing with it. And anytime I can clarify anything for anyone, that's always a good thing. But yeah, I hope y'all enjoy the rest of your day. And if you need anything, just let me know. Cheers, y'all. Bye now.